Hey everyone, welcome to our Asset Management Friday segment of the Passive Income Through Multifamily Real Estate podcast. I'm your co-host Kyle Mitchell, also joined by Gary Lipsky. This segment is focused on educating operators, building better systems, and becoming a best-in-class operator. Since we're also live on Facebook right now, make sure to type in any questions you have in the comment section below. Also, be sure to check out our Facebook group, Passive Income Through Multifamily Real Estate. All right, today on the show, we have Tauheed Siddiqui. How you doing, Tauheed?
I'm doing great. How you doing?
I'm doing very well. Thanks for coming on.
Sure. Thank you for having me.
Great. Well, if you can start by telling the listeners a little bit more about yourself and what you currently do.
Sure. So I'm a land developer and a builder of multifamily buildings here in North Dallas. And in addition, I am a GP in 1,300 units, basically in Texas and Florida. And I would say the combined acquisition price of those 1,300 units is about $90 million. They're all Class B and Class C.
Welcome to the show. Let's talk about downside protection. Obviously, this is more important than ever. What are three key things you do for downside protection, Tauheed?
Sure, and I'm sure for those of you who know me, I always talk about it, right? Even in the greater market. So look, so three key things, right? Probably two are before you make an acquisition, and one is at closing or post-acquisition, right? First and foremost, it's going to go back to your underwriting assumptions right now, right? What kind of rent growth you were using, what kind of economic vacancy, tax numbers, and the delta of the reversion cap rate versus, going in cap rate. And I think, anyone who kind of did not use the long-term historical norms and instead preferred the current figures, of the hot markets might be hurting right now. But if you went with, longer-term averages, it's fine. So one is, so for very first one to me for downside protection is the conservative underwriting assumptions that you use. Second is location and the sub-market, even within the market, right? Just saying DFW, God, it's very wide, right? Even within DFW, certain sub-markets and location will perform a lot better. And when you're this late in the cycle, you even like you got to be more picky with your locations. So location and sub-market is going to be critical. These two are prior to closing, but post-closing or at closing, cash reserves, right? You always got to have liquidity. If you don't have liquidity, God, it's if you can't survive in difficult markets, then you can't thrive later on, right? So it's all keeping your head above the water during difficult times. So for downside protection, it's conservative underwriting, location, sub-market, and cash reserves.
And what percentage of the purchase price do you set aside for your reserves?
So for me, there's no really set formula, to be honest. It depends on the size of the property. It depends on the condition of the property, right? And even it depends on the location of the property. So for example, condition of the property, right? Let me give you an example. You may have even Class B property that may have a higher maintenance cost versus another Class B that has a lower maintenance cost. Let me give you an example. In 2018, I bought a property for $11 million, and that has an immediate repair list of $192,000. Last year, bought two properties, and one had zero immediate repair, and the other had $3,500. So it depends, right? That kind of tells me what I could be spending. So it's cash reserve is basically, if you think about it, if you can have at the very minimum 3 months of expenses, right? When you're taking a significant hit to your total income, that could work. However, there's no fixed number. The bottom line is, would you be able, during the headwinds, would you be able to keep your head above the water? And again, right, if you can survive through difficult 6 to 12 months, right, man, you can on the back end, you're gonna thrive. Look, right now, if you don't go in forbearance, right, which I'm sure vast majority of the properties are not, you're okay. But if you go into forbearance and you're gonna have to live with those stringent terms, you may not see the back end of this thing, and that's trouble.
Yeah, I agree. Let's talk about hedging the knowns versus the unknowns.
Yeah, that's my other favorites, right? You can, there are known unknowns and there are unknown unknowns, right? Known unknowns, you can hedge, right? It may not be the magnitude for example, interest rate kind of hit you hard, but hey, if you go in long-term fixed rate, you're fine. The problem is with the unknown unknowns, you just don't know. And here you go, man. Who would have guessed, right? COVID-19, right? So what can help you? It's very much, the three things that we talked about earlier. Again, liquidity is the key, right? For any kind of unknown that you don't know, you don't anticipate, and it's going to hit you, you're going to have to rely back on your liquidity. And it goes back to, again, the conservative underwritings, right? And the great locations right now are going to survive. If you are in difficult markets with no liquidity and you are aggressive in the underwriting, God, it's going to be tough.
And how do you manage differently during downtimes? Just a couple of examples.
So for me, first of all, right, I'm working very closely with my property management companies in Florida as well as here, right? At the end of the day, they're there. I'm not there from 9 to 5 every day. So I'm working very close with them while not overburdening them. That's key also, right? Right now, it's difficult times. Those guys need to do work, but I'm working very close with them. We're still doing 1 or 2 weekly calls, but be very close. Working very close. The other thing is really communicating more frequently with tenants as well as investors. Right? We all know right now investors are concerned. So, for example, I think on one of the properties we bought, we closed on February the 25th, right before all this storm hit. And I think in just April alone, I sent like 4 updates, right? So you got to stay, in touch with your investors. You got to stay closely in touch with your tenants, right? The other thing we are doing right now in these difficult times is working with tenants, right? And I just keep also communicating to my property management company. The more we assist them, the more it's going to help our bottom line. Like a couple of things we've done. In 2 of my properties here in Dallas, we arranged meal assistance programs for kids. So now we have a nonprofit coming to our property and giving meals to kids 6 days a week, right? I mean, you're getting a lot of great, goodwill from the tenants, and you're helping them during these difficult times. The other thing we're doing is not only just letting them know where they can go for like rent assistance programs. We have set up a station and said, why don't you come to the office? We'll file it for you, right? We'll provide you the guidance. We'll help you. And even if you want us to file it for you, we will. Because, some demographics tenants we have, they're not very good maybe with the internet, right? So we help them. These are things we're doing. The other thing, is obviously, look, there's no rocket science, but now you got to be scrutinizing your expense, right? What we were doing before, obviously you always, want to be very careful with expenses, but more so now. So cut where you can and even revise some agreements where possible.
Great advice. How are you handling lease renewals differently than you did 2 months ago?
Yeah, so our focus right now, and this is true pretty much across all properties, is to what I call the, let's shut the back door, right? As much as, or close the back door as much as you can, right? So what we're trying to do is renew as many as possible, because the fact is they also don't want to move, right? So we are being flexible and we are providing them incentives so they stay with us. Not only are we being more flexible with the new leases, with the renewals, but also honestly with new leases. For example, the property we closed on in February, obviously we had a plan to upgrade and then raise rents. Right now, all that is, all those plans have been frozen. Our focus right now is to stay or to keep the occupancy as high as possible.
All right. I'm going to pass it over to Kyle. Wrap it up.
All right, Tauheed, we ask everyone this final question. What is your asset management superpower?
First and foremost, right, you got to have a very strong relationship with your property management company. Again, right, they're the one who execute your plans, right? So for me to do anything from my standpoint, on asset management, I got to have a very good relationship with property management company. And I try to do that in Florida as well as here in Dallas. Other than that, obviously you always want to stay focused on the data and KPIs. So I always watch very closely, not just the daily numbers, but more trends in the occupancy, in delinquency, in collections, and the turnover, right? Turnover is another thing, by the way, that is obviously very critical. We all know it's very expensive, even in a good market. And right now you want to pay a lot of attention to your turnover. So just to summarize again, right? Having a good relationship with the property management company and monitoring the trends closely on occupancy, delinquency, collections, and turnover.
Great. All right, Tauheed, thanks for coming on and talking to us about downside protection. Learned a couple things there. It really starts in the beginning on downside protection with conservative underwriting. And then, as you mentioned, real estate is hyper local. It's not just local. So it's not just the market, it's the neighborhood you're buying in. And then cash is king, right? So have cash reserves and liquidity. So if you can tell the listeners where they can find out more about you.
Well, sure. My construction company, TAAS Investments, we have a website, which is TAAS Investments with a plural, .com.
Perfect. And to all our listeners, thanks for listening in. If you like this episode, please head over to iTunes and Stitcher and give us a like, subscribe, and review so we can continue to grow the audience. And we'll talk to you next week. Hey, everyone. Thanks again for tuning in. We really appreciate your support. If you're interested in learning more about APT Capital Group and speaking to someone on our team, click on the link and schedule a call with us. We're here to help, and we'd be excited to speak with you and get to know more about you and your goals. Talk to you soon.